What's up guys, Bill here. In this video I'm going to show you how to use Tradytics Darkpool Market Dashboard to track institutional trading activity. This can be useful to gauge market sentiment broadly. It can be useful to manage your open swing trades, and it can also be useful as inspiration for new trades to take. So what you're going to want to do is come to the market dashboard here, click on Darkpool, and you're going to get this window. And I'm looking at the Darkpool side. They also have block trades, but we're going to focus on Darkpool today. What I like to do is filter for over $100 million orders and up. And you'll see a bunch of results today. I'm filming this video on Tuesday, September 10th because it's the day before CPI. You're not normally going to get this many prints in a day, but before binary events, you tend to get a lot of these. There's a bug on Tradytics that does that. Excuse me for that. You're going to get a lot more in front of these binary events, so I did this on purpose so we could go through and check out a couple. The biggest thing here when you're looking at these is you want to find prints that are notable, right? These values, they might sound like a lot, but for some tickers, they're not. For example, Apple, 350 million, that's not that big of an order. I'm just familiar with Apple and how much it trades. But for an example, what you're going to want to do is you're going to want to open also the ticker dashboard Darkpool, where you can go ahead and enter any ticker you want and get that information. So if we check Apple and we see down here today's print 9/10, 350 million, we look around, we can see that's not that big, relatively speaking. Almost all the prints are that big, and there's one that's 1.2 billion, okay? We want to find the 1.2 billions for every other ticker and every other ETF, right? And this activity, you can see that some are individual stocks and some are ETFs. So with the ETFs, these are really good at helping you kind of gauge market sentiment because a lot of them are SPY adjacent. Things like IVV, SPLG, they have the same holdings as SPY, but institutions will trade via these to kind of disguise their actions because everyone's looking at SPY flow and things like that, but they might not be tracking IVV, they might not be tracking SPLG, SPXL, and things like this, okay? So those can help you with broad market sentiment, help you see sector rotation. If you notice that certain areas of the market are getting a ton of flow at key levels and key pivots, that can help you with that. And individual tickers obviously can help you with trade ideas for individual tickers. So let's start with some individuals, right? Let's look at Meta, 500 million. Is that a lot for Meta? Let's see. Here's our order today, 500 million. Okay. It's pretty decent size. It's not the biggest order, but check this out. Yesterday, we had its biggest order in quite a while, almost $1 billion, at 504.80. Well, today's order just happens to also be at 504.80. So to me, that's notable. Let's pull up Meta's chart. I already have these marked here. But so here we are on Meta. We have 2 days in a row of 504.80. So what do you do with this information? Well, I mean, that's really up to you and how aggressive you want to be. You know, you can always see an order that day and say, oh, I think this is bullish, I'm going to buy right now. I tend to not do that, right? But one thing you can do is just watch this level for the next couple days. These Darkpool orders, the levels tend to act as support and resistance. So just like when we're trading breakouts or breakdowns at big levels of support and resistance, what do we normally get? The breakout and the retest. So maybe potentially tomorrow it's CPI. It could be a volatile day, or there could be big moves in either direction off the print. We might see a big flush, right? And then a few days later, a move back to retest. That could be a safer space to take a short, right? With a tight risk here, and if the daily closes back above this level, that means that the institution wasn't able to defend this, and maybe they got out and they took profit down here, and they're all out, and you can just take a small loss. Same thing if it rips up tomorrow. If it gets a pullback a few days later, you can enter along here with a nice tight risk. And try to trail these institutional orders. A lot of times these big orders come in at major pivots, so maybe this is a dip buy off the new all-time highs. Maybe it's a fresh short on the retest of these crossed back EMAs after some weak price action in a seasonally weak month of September. I don't try to predict the market, and neither should you, but these orders can help give you a hint and let you trail from a safe distance. Let the initial move happen and look for the retest, right? Okay. Let's talk about some of these ETFs. And again, I apologize for having to keep refresh this page. There's a bug on Tradytics they need to fix on this page. Anyway, IVV, that's like SPY, basically, all the same holdings. And if you're ever confused, you've never heard of these tickers before, these ETFs, just Google the symbol name and largest holdings, and it'll pull up and you'll see top 10, Microsoft, Apple, Nvidia, right? IVV, let's check that out. Today's order, 1 billion. All right. So that's really huge for this this ticker. And look at, we also had just under 1 billion order on the 5th. That's 5 days ago for 40 cents away from here. So kind of similar to Meta. If we pull up IVV, which is going to be your SPY, now we've got these two stacked orders right around where we closed today after hammering, coming back up to test these EMAs. Are we trying to put in a higher low here? Are we simply getting ready to reject at these EMAs and kind of a bear flag look? Who knows, right? We're not trying to predict, but it's nice to know that there's a lot of action happening here that we can maybe revisit later and take advantage of. We'll do one more example. IJR, that's small caps. Let's look at IJR. Here's a group of prints today, 3 of them. The biggest one, 320, is 4 or 5 times bigger than all these prints up here. And then there's another one for 100 and then for 50, all right around the same spot. Again, are we trying to put in a higher low here? Are buyers stepping in? We can see that we got the big wick down. We closed above the level. I mean, if you really want to get aggressive and the day you see a print come in, say, well, if we close above, I'm going long. If we close below, I'm going short. You can try that. But in my experience, a lot of times you get a little bit of overflow and overshoot in some of these levels. So, don't be surprised if tomorrow we're lower, even though we closed above. That is not an ironclad strategy by any means. Trading, a lot of it comes down to your aggression level and how aggressive you want to be, right? Maybe you never get a chance to enter this trade because we just rip up and it never retests. That's a possibility. Again, we're trying to shoot for what's the most probable. What tends to normally happen? You get retests after breakouts, right? So that's the way I usually tend to approach it. But hopefully this helps, guys. If you have any questions about these dark pool levels or anything like that, just leave a comment or find me on Twitter and I'll help you out.